Good morning, everyone. Why don't we get started? Speaking of sustainability, my printer went double-sided on me, which I guess is nudging me to go sustainable here, which I find kind of frustrating at times. Good morning, everyone. My name is Yrjo Pandis. I'm the Associate Dean at the Haskayne School of Business, overseeing our professional graduate programs. We've got a very engaging event this morning, the Enbridge Research in Action Seminar Series. Today we'll be speaking about the evolution of environmental, social, governance, otherwise known as ESG factors, and financial decision-making within today's political and economic landscape. While issues such as tariffs, market access, and geopolitical instability have taken precedence on the corporate agenda, the question is, where does ESG fit in today? I'm sure it'll get the juices flowing early on a Thursday morning here. Thank you again for joining us. We're delighted you chose to join us, and we hope everyone takes the opportunity to network. We've got a great crowd, a diverse crowd, lots of opportunity for networking at your tables and after. Before proceeding, I'd like to make an important acknowledgement, recognizing the lands in which we are situated. So the city of Calgary is located in the heart of southern Alberta and both acknowledges and pays tribute to the traditional territories of the peoples of Treaty 7, which include the Blackfoot Confederacy, comprised of the Siksika, the Piikani, and the Kainai First Nations, the Tsuut'ina First Nation, and the Stoney Nakoda, including Chiniki, Bearspaw, and Goodstoney First Nations. The city of Calgary is also home to the Métis Nation of Alberta, Districts 5 and 6. And I've been, doing this land acknowledgement because I've been hosting a lot of events over the last weeks and also listening to it. And for me, it brings top of mind a few things. First of all, obviously the beauty of the lands in which we're situated here in southern Alberta, in the Calgary area. I'm from Toronto originally, and when I moved here, I was blown away. And so when I do these land acknowledgements, it gets me reflecting on the privilege we have in living of these lands, and in part because of the stewardship and the care that Indigenous peoples have shown to the lands over millennia, really. The second thing that I reflect on is, I grew up at a time where we didn't even discuss Indigenous peoples and truth and reconciliation, and we're just on the heels of September 30th. And I've got young kids, and I see the curriculum they're going through and how much attention is devoted actually to truth and reconciliation and how much it's embedded in the curriculum. And I'm really encouraged by that. Like, I know at times it seems like it's glacial pace at the progress, but we are making progress given where I was in my generation, not even hearing a thing. And that could be because maybe I was born in Toronto and we don't learn anything about west of Mississauga, east of Scarborough, or north of Richmond Hill. But I'm pretty sure most people didn't have that in their curriculum back in the day. And so those are the couple of things that come to the top of my mind. So this series brings together influential researchers, practitioners, and industry experts to discuss leading-edge sustainability research. I want to acknowledge our friends from Enbridge. The success of this series is made possible thanks to Enbridge. We're grateful for your support and your recognition of how collaboration between post-secondary institutions and the business community enables us to create enriching learning environments for future leaders, foster innovation, and engage with our community. And I know Enbridge has a table here, I believe, so maybe a round of applause and a thanks for them supporting this series. So again, thank you all for being here today. There is a QR code on the screen where you can submit your audience questions. And from what I hear from the moderator, there's already a ton of questions in there. So again, a lively topic, engaging a lot of interest. I'd like to introduce our panel. So first of all, we've got Fanny Doucet, Managing Director and Head of Sustainable Finance at Scotia Capital. We've got Dr. Yrjo Koskinen, the BMO Professor of Sustainable and Transition Finance at the Haskayne School of Business, also my colleague, and our moderator, Rui Ismail-Teja, Vice President of Policy and External Affairs at the Calgary Chamber of Commerce. Welcome to the stage. Maybe a round of applause to get going. And I'll turn it over to Rui.
Amazing. Thank you so much, and good to see all of you. Is this working? Yeah, that seems like it's on. Good to see all of you. We're quite impressed with how early it is and how full the room is. So thank you for making this a priority. And I'm so excited to have a great conversation today. And thanks for all of the questions that have come in. You're all making my job very easy because we've got a ton of questions. I think we'll be able to get to them all, but please do send more in. There's no shortage of things to talk about. So we'll dive right in and give us the lay of the land of what you're seeing on the ESG side of things. What's changed in the last little bit, and what are the big trends that you're paying attention to? Fanny, we'll start with you, and then you, Yrjo.
Yeah, sure. And first of all, thank you guys for coming, as you said, very early in the morning. I'm very impressed by the crowd turnout today. And thank you so much to the Haskayne School for inviting me as well, and for you guys too for accommodating me. So really pleased to be here. And to answer your question on what has changed around ESG, it might be easier to think about what hasn't changed around ESG over the last few years. But just to give a bit of background, so as mentioned, I lead the sustainable finance team at Scotiabank. So I've been doing sustainable finance probably since 2018. We officially launched the team in 2020. So we've seen kind of the later, I don't want to say later stage, but kind of the later stage evolution of ESG and sustainable finance. And there has been a lot of changes. There's been changes in terms of what we talk about, how we talk about it. We first had corporate sustainability reporting, and then we moved that to ESG reporting, and then we're moving that back to sustainability reporting. So all of the lexicon and the words are really important. And I know one thing we talked about is obviously ESG has become really politicized in today's world, and especially over the last year and a half. The term ESG can be a bit of a lightning rod depending on the crowd that you're speaking to. So I think a big shift that we've seen is really in terms of when we talk about ESG, when we talk about sustainability, the need to be a lot more specific and a lot more nuanced in terms of what we're talking about, and really talking about what are the material and the financially material risks to a business or to an organization, and really focusing on those. So things like emissions, water risk is super important, especially as we're building up data centers, Indigenous relations, that social license to operate. So instead of using a blanket term such as ESG to talk about anything, we try to be a lot more specific in what we're talking about. And another big part, or much bigger part of the conversation recently, has been bringing the economics into it. So not just thinking about ESG as doing good, but being economical about it as well. So again, when it ties back to when I talked about managing financial risk, but it's also about managing future opportunities as well. So really kind of tilting how we think about ESG a little bit. But welcome your views too.
Thank you, Fanny. My job is going to be really easy today. I'm always going to say, I agree.
I'll have to make you start.
I have to say something controversial, and then I say, oh my God. No. So it's true. I think the heyday of ESG happened 4 years ago in the Glasgow COP26, when everything, finance is going to be different. We're going to revolutionize business finance. And now it's really the Glasgow agenda is now unraveling. For example, Prime Minister Carney's brainchild, Net Zero Banking Alliance, just ceased to exist. So I would have never imagined 4 years ago where we are now. So there has been a big reversal, and there's no doubt about huge headwinds against ESG. And like Fanny said, the term ESG has been politicized. So I was in a seminar in Montreal in February, and I said, ESG is dead, long live sustainability. Mm-hmm. So if ESG becomes politicized as a term, let's get rid of the term ESG. I mean, we can stick to sustainability or responsibility, whatever works. So we shouldn't be hung up with terms. But what is important, like Fanny said, that now we have to think about economics and business. So in order to have sustainability initiatives, they have to make business sense. They have to make money. Nowadays, there is no room for luxury. And less societal pressures for having sustainability initiatives. So right now, the landscape has changed in the same way that, okay, show me the money, hopefully in the short term. And obviously, we sometimes think that sustainability initiatives bring higher profits and prosperity in the long term. But now people are a little bit more impatient. Okay, they have to show that, okay, it makes sense in the short term as well. And this was really a wake-up call to me when I was... I'm originally from Finland, and we have a summer cottage in Finland. And when we go back there, I meet my old friends, and some of them are corporate executives. And whole Scandinavia is very, very much in the sustainability bandwagon. But my executive friend says, nobody is paying premium for sustainability. We are willing to support sustainability initiatives, but they have to make economic sense. So that has changed for sure in the past 4 or 5 years.
And what do you think is behind that change? Fanny, have you seen that shift as well? And why do you think that shift has happened? And should we expect to continue seeing it going forward?
Yeah. So, and I was going to, before I get to that, I was going to talk about, what hasn't changed as well. And, I've had the benefit of being here in Calgary over the last couple of days, meeting with clients and with my team. We speak to all the major corporations in Canada and the US and across the Americas, really. And at the end of the day, much of what's happening on the ground has not changed. Companies are still focused on this because they're still focused on managing risks. They're still focused on making money. They're still focused on finding the opportunities, and a transition will bring opportunities. And so what is happening on the ground and what companies are actually doing hasn't really changed that much over the last couple of years. It's really been more in terms of how we talk about it and how we think about it and how we characterize it. So I think that's been really positive. That's really positive to see, and something that we don't see in the headlines that are popping up every day. Your question in terms of what caused this change, obviously a change in politics, and the rise of populism has been a big one. I think we also can't forget that when ESG really in the heyday, as you called it, in 2021, 2022, interest rates were near all-time lows. And so to be able to invest in new technologies or emerging technologies or projects that might be a little bit outside of a company's direct business, it was cheap to do. And so there was a lot less risk to it. And with the big increase in interest rates that we saw after that, it really had a big impact on the clean tech space, on the renewable space. And that drove a lot of the headlines that we saw in terms of the backlash in ESG, or investors aren't liking this anymore. It was really more of an equity story in a sense, and it was really focused on a subset of the economy and due to a change in market dynamics. So I think that's another one. And then a third one that I'll mention as well is, of course, the geopolitical risk that we've seen with the war on Ukraine, especially, and what we've seen in the Middle East over the last couple of years. A huge focus on, it's not just about energy transition, but energy security. And now with the growth in power demand, it's about energy accessibility and energy affordability. And so how do we balance all of these together? And when you mix that with the rise in populism is when you get some of these really strong views from different people. So it's been a really big change in environment. And the last one I'll mention 4, so I hope I don't steal one of yours. And I did talk about it, but just the sheer surge in need for energy. With the rise in AI, it's really hard to talk about a transition. And I'm, of course, not the first to say this, and you guys have partly heard, but like a lot of it right now is more addition. We just need as much power, as much energy as we can, so that accepting of we kind of need an all of the above approach versus just focusing on that transition. So again, that's why I mentioned easier to talk about what hasn't changed.
On the, I'll pick up on the third point you mentioned there. We've got an audience question, and Yrjo, will start with you on this. But does the de-emphasis of ESG policy in the U.S. and the shifting economic priorities of the Canadian government change the appetite for firm-level ESG initiatives? What are you seeing on that front?
And you mean in Canada or?
In Canada, yeah. In firms within Canada, how are you seeing the U.S. changes?
So this is an excellent question. That's, I always say that when the question is difficult. So I think this what's happening in the U.S. is going to be a great opportunity for Canada to differentiate itself, especially if you want to gain market share in Asia and Europe. You cannot sell in Asia, you cannot sell in Europe without taking sustainability very, very seriously. So it's a fantastic opportunity. Of course, you have to be careful a little bit. I mean, if we are selling to Texas, perhaps we shouldn't be emphasizing our sustainability credentials. But if you're selling to California, there we also have to really show that we are taking sustainability seriously. So if you're not thinking about, okay, maybe U.S. is still remaining by far, it's going to be, for foreseeable future because of geography, it's going to be our main trading partner. So we have to think about how we message vis-a-vis U.S., but if we want to gain market share in Europe and Asia, we have to show that we are reducing our overall greenhouse gas emissions, emissions intensity in oil sands is going to have to go down. We have to have perhaps, if you want to expand energy production, like so Fanny said, that this energy demand is going to be increasing. So oil and gas is not going anywhere, but the emissions intensity has to go down. So we have to take seriously, for example, carbon capture and storage, and start investing in that. So it's a great opportunity, but it's going to cost us some money, but and it's not easy fix because perhaps the returns are not going to be immediate. But if you want to have a long-term future for our resource sector, we have to take it very seriously.
And I'll steal your line by saying I agree with what you just said. But we've certainly seen, it's an opportunity for Canada. We've certainly seen China, for example, take advantage of the opportunity in terms of the U.S. stepping back and China stepping forward in terms of what they're doing with electric vehicles, what they're doing with renewable energy. Obviously, totally different economy, totally different government. They can move a lot quicker than others can, but certainly seizing the opportunity with the U.S. stepping back. So I do think it presents an opportunity for Canadian companies. Obviously, a lot of Canadian companies are international, multinational, Scotiabank, one of them. So it does bring complexity, for sure.
What does that seizing the opportunity actually look like? Is that companies changing their behaviors? Is that public policy changes? What does that look like? Can you unpack that for us a bit?
Yeah, I think for me it's, with how we're going to see, again, going through the transition, and I talked about are we transition or addition, but as we move towards, what I like to call the economy of the future, there will need to be shifts. And so who's going to be successful at leading some of these shifts? Who's going to be successful with some of these technologies to bring to market? And when you're more of an early entrant, you're going to have an advantage versus if you might be late to the party because you haven't been focusing on the future as much.
So I agree. So in Calgary, we have a growing clean tech sector. So I think one of the best things that Canada can do is invest in clean tech startups, whether it's happening in Vancouver, Calgary, Toronto, Montreal. Canada can be a superpower in clean tech. And if you think about, so how did the Canadian high-tech companies usually scale up? Oh, by going to the US. So maybe that route is now going to be harder. So the challenge for Canada is now that we have to figure out how we can scale up in Canada. And that means that we need more institutional investors, being limited partners in the venture capital funds. We need more money coming into venture capital. We need less inter-provincial trade restrictions so that we have a truly unified market here in Canada so that we can scale up domestically before we're going abroad. So there's big challenges, but I mean, there's a huge opportunity in clean tech right now. And there's amazing companies in Canada. We just need a little push to get them through.
Yeah, and it's a good point in thinking about, like, to be specific, things like carbon capture, thinking about pathways, thinking about we have a few really great direct air capture companies that are looking at building out that technology, if successful, that can be utilized across the world. And I also, when thinking about these opportunities, I've covered power for most of my career before sustainable finance, so very familiar with the power market. And I live in Toronto, so we have a lot of nuclear. And it's always very jarring for me when I go to nuclear power conferences in the US or internationally, how well-loved Canada's nuclear industry is. And so it's an example of being, not that Canada or Ontario necessarily was early. There was obviously others, but we did it really well. And we had really great technology, really safe technology, good track record of, we've had a lot of refurbishments on time, on budget that others haven't had the pleasure. And companies globally in the nuclear and power space look to Canada for leadership. And so that's a great example. Now we're seeing a nuclear renaissance, and we've seen the likes of Ontario Power Generation sign Masters of Understanding with companies globally to be able to share technology and then building up this skill set. So I think that's a great example of, if you're earlier on, how you can then take advantage of it later.
We've got a question around some trends in the technology space in particular. And curious, from your perspective, are we going to double down? Is Canada likely to double down on some of these technologies like nuclear where we've been quite advanced? Or are we likely to diversify and look at new markets? And then Fanny, I'll look to you for your perspective on what you're hearing from investors on this after that.
So I think Canada should definitely try to take a leadership in the small modular reactors. Everybody's now talking about SMRs. I'm a little bit skeptical because, going back to my Finnish experience, Finland is very big on nuclear energy. Our latest reactor took twice the amount of time to build and 3 times the cost. Of course, that wasn't a small modular reactor. That was a traditional big reactor. So hopefully the small modular reactors are going to solve these cost problems. Right now, nuclear energy is not cost competitive. It's way, way too expensive. It's way more expensive than for example, renewables and natural gas. So hopefully we can drive down the cost curve and learning curve for small modular reactors. So Canada, being a long history in nuclear energy, especially in Ontario, could have a bright future if we just seize the opportunity. But we have a special problem in Canada. We don't realize that the world doesn't wait for us. We have to move faster. Mm-hmm. The clock speed in Canada is always too slow. I mean, it's frustrating. I've lived in the US 12 years. Things happen there. The business in America is business. They know how to do it. We have to get more ambitious, faster, executing, simpler regulations, having more higher standards for businesses. We need to get better because the world, China, like we mentioned, China is moving really fast. So we have an opportunity, but we have a just tendency of talking about the opportunity instead of actually doing something.
Yeah, and maybe this is one where we might not agree because I am very optimistic on nuclear and SMRs, and was very pleased to see it as one of the first of the announced major nation-building projects, the Darlington SMR. And I do think first of a kind is always going to be more expensive. It can't be cost competitive, but it's just a direction that we need to move with respect to nuclear, especially the type of the power needs from AI, we need to be able to build out nuclear. So I am quite optimistic about that. So a bit of a disagreement on that. But to your question in terms of how are investors viewing these newer technologies, I think again, it goes back to some of the discussion we had earlier where it has to be economical, it has to make business sense. No one is betting their shirt on a certain type of technology necessarily. So it really does have to make sense. So I'm not going to pick and choose, which technologies I think is going to be successful, although I did mention nuclear. But there's a lot more due diligence, and there's a lot more, scenario analysis in terms of even if this technology ends up working out, what's the demand going to be under a bunch of scenarios? Because we've seen over the last few years that maybe where we expect it to be over the next 10 or 20 years, really we're not on track for that now.
I've got a question from the audience around how we think about growth and moving from long-term rather than short-term. And so with these investment cycles and sort of promoting the short-term thinking, how do we get to thinking much longer term and acknowledging that some of this conversation might be a pendulum and ESG will be back on top in not that long? Fanny, I'll start with you.
Yes, we've talked about that so much, and I have our equity research team here, Pat Bryden and Zishan, and we talked about this yesterday. I think Pat talked about how many cycles he's been through in the energy space, and we have to think longer term about it for sure. And investors are thinking about it longer term. I had a really interesting conversation earlier this year that has really stuck with me from one of the biggest asset managers based in the US. And the lead for their sustainability investing said, now I'm really going to see who the ESG tourists were. Meaning that now that it's not necessarily the fad of the day, who's going to continue to push forward, because that is how they're orienting their business. That is what makes business sense for them, versus who's going to take this chance to back away and move away from whether it's previous commitments or previous work. So I think we'll probably see some of that. But I do think there's also this shift back towards pragmatism and practicality. Instead of really focusing on these huge aspirational goals of where we may want to be in 2050, what can we do that's practical, that's economical, and that's impactful now? So a bit of a balance in terms of that short versus long term. But I think we're thinking about the impact in a bit of a shorter term perspective than we were before, and certainly more of a realist and impact focus too.
So if I may add, so one aspect that is clearly happening right now is that even in the United States, a lot of asset managers, companies are still thinking about sustainability, but they are not talking about it because they don't want to be the target of the Trump administration. So what we see, especially in the US, we have started seeing a lot of so-called green hushing, even in some of the oil and gas majors. The biggest one, I heard it from their chief sustainability officer, that we do much more than we tell public. So big oil and gas companies in the US are even thinking about these issues because they're pragmatic. They think, okay, the world is changing. Climate change hasn't gone anywhere. This is a cycle. This is maybe the low point of sustainability. It's going to come back. Hopefully, it's going to come back a little bit reformed without those overblown outside claims. We are not changing the world. This is not a revolution. This is more like an evolution. And like Fanny said, we have to be pragmatic. We know that, for example, we thought in Western countries, we think that, coal is dead. Well, coal is not dead in China or India. China and India need power. They need all kinds of power. China is a superpower in renewables, but it's also a superpower in coal. It's kind of running two tracks at the same time. And that's a reality. And hopefully we can make the coal as clean as possible with carbon capture and storage there as well. and we can't blame that we can't do anything because China is using so much coal. Well, if we don't do anything, China is going to own the future with renewables, batteries, electric vehicles. So we have to realize that all people are, countries and companies everywhere are making progress. They are not advertising as much as they used to, but the small pragmatic problem solving is happening all the time. And that is extremely encouraging sign. So this morning when I got up early and I was reading Financial Times, and I happened to read an article about carbon emissions from the Permian Basin. The absolute emissions have been going down for 3 years. Who knew? I didn't know about that. There's a new report by S&P Global already released in the end of September. So the intensity is going down, but also the absolute emissions are going down in the Permian Basin. And this is happening in the US. So that is an encouraging sign.
I've got a question. I just want to pick up on what you said about sort of the greenwashing. Audience question around what solutions exist for corporations concerned about greenwashing claims due to uncertainty in green bond compliance reporting of ESG sustainability impacts?
He's asking me?
Do you want me to answer that? I think I know who asked that question.
Let me start and then you can correct
Okay.
me. Of course, this is a very topical issue now in Canada because of Bill C-59. And that bill was done with very good intentions. But unfortunately, the language maybe could have been more precise. So there's a lot of companies who don't. So what is now allowed? What are the consequences? What are the potential liabilities? So we need to clarify that language so that there is certainty what companies can say and then what they shouldn't be saying. So there's a lot of work to be done. And some companies are definitely afraid of frivolous lawsuits. They don't want to be litigating in the courts all the time. So that has had some negative consequences. I mean, if the Bill C-59 refers to international standards, well, what are the international standards? There are several standards internationally, so we have to be much more precise when we're talking about greenwashing in Canada. So I think everybody understands that there has to be some greenwashing legislation because we have to make sure that the claims are truthful, but they have to be, companies have to know what is allowed and what is not. And they cannot be ambiguity, then we settled in a court, and then it's going to be a huge court case and huge penalties. Those are big risks for companies.
Yeah, and so I think from my perspective, with green bonds specifically in Canada, with Bill C-59, aligning to the International Capital Markets Association green bond principles is the number one tool that we use to think about that with Bill C-59 to say it does align with internationally accepted standards. And so that is what we lean on heavily is the principles that come from ICMA. On the loan side, the principles that come from the LSTA. So they're pretty well established. And the green sustainable bond markets, they do have frameworks where they clearly outline what green bonds or sustainability bonds will be used for, how they're going to be allocated, what the impact reporting is. So there is a lot of governance involved in this market that really can help mitigate against greenwashing claims. On the use of proceeds side, things like taxonomies can be helpful as well if you're aligning to, your technical criteria for your eligible projects align to a taxonomy, whether you look at the EU taxonomy, the Australia taxonomy, or you look at standard market practice. I think that's been really helpful. So I don't have, and you work with a bank like Scotia who helps you structure it well. And then also having, it is also important for companies that look at the sustainable finance market, especially the sustainable bond market, to make sure that they are thinking about, how they're communicating their overall sustainability strategy as well. And we see that included in a lot of the frameworks too. So it's not that there are specific requirements around what a company must have in that sustainability strategy, but just putting the position, putting that bond offering in context is really important too.
Awesome. I'm going to shift
Sorry, I did want to add a point too. I didn't mean to cut you off, but when you were speaking, I was thinking about, with this regulation and this policy, there's obviously been a lot of challenges to it, both from corporation side, financial institutions, even investors are struggling with it as well. And I do think we have to be really careful on that because it does stymie innovation. So, we work at Scotiabank, we have a really big footprint in Latin America, who those countries have been super focused on sustainable finance. If we look at Mexico, a quarter of the bond issuance in Mexico has a sustainability label, a quarter. That compares to Canada at about 5%, Europe at like 18, 19%. So really huge amount of sustainable financing. And when we work with our clients in Latin America, because they're not as focused on this greenwashing, they're so much more innovative. And they're willing to do new products. They're willing to look at things differently and test it out in the market. And they have less of that fear that they're going to be accused of greenwashing, or that fear where they're going to try something and it's not going to be successful. And then there's going to be reputational risk where they're like, well, if we try it and it doesn't work, we tried it. That's okay, we'll move on. There's not that fear. And we've seen so much more innovation. We've actually taken ideas and deals that we've done in Latin America, and we've brought the idea to Canada. We're like, this worked in Chile or this worked in Mexico. You should consider doing a transaction like this. So we do have to be careful. There needs to be a balance that, yes, we want to make sure that we have some type of regulation on greenwashing, but we want to make sure that we can allow this market to continue to be innovative. I mentioned at the beginning, Scotiabank launched the Sustainable Finance Group in 2020. That was only 5 years ago. We're at the beginning stages of this market, and so there will be trials and tribulations. We will do things that we look back on and we're like, that maybe wasn't the best idea, but at that time it worked. So we have to be careful on that point.
It's a perfect segue of where I wanted to head around public policy and some of the changes that we're likely to see. Yrjo, you mentioned it earlier, and we've got an audience question related to how likely we are to see the dismantling of carbon pricing structures, so whether it's a carbon tax, cap and trade, or voluntary systems, as the political climate changes. What do you see as being on the horizon in terms of the public policy landscape on this front?
So as an economist, I hope that we don't see any dismantling, because that's the most cost-effective way of reducing carbon emissions. So I hope we're going to have a robust industrial carbon tariff system in Canada. Right now, of course, we have province-based, a little bit of differences between provinces, and Saskatchewan has scrapped the system completely. So we're going to see what the current government is going to now do. They're supposed to come up with some environmental plans shortly. So we're looking forward what the formerly environmentally conscious prime minister has in his sleeve. But I hope that I'm a big fan of carbon credits as an economist. And of course, some businesses don't like that, but that's life. I mean, what's the alternatives? Regulations. The regulations are always more expensive than carbon credits in the end. If I go back to, I really like Fanny's South America example. I've heard same things about Asia. So I heard that Asians are a little bit kind of discouraged. The Europeans tend to lecture them about sustainable finance, and they said, "Don't lecture us. We know what we're doing. We don't come up with these fancy reports that you Europeans do. We put sustainability in our business plans and then strategy, and we are making progress." So we have to realize that there's good things happening everywhere, Asia, Latin America, including in the United States. So there's no room for despair. There's, of course, now backlash. We live through it. But all this will come back and hopefully in a more healthy form.
Fanny, you mentioned nation-building projects as well, and I wanted to pick up on that thread of we've seen kind of a resurgence of the Build Canada I'll call it movement, and just a real appetite to build in Canada. How does that square in your mind with sustainability and ensuring that we're actually able to build the infrastructure that we need while also prioritizing sustainability? What does that tension look like?
Yeah, I think it actually aligns well. We have done an analysis within our team in terms of comparing all of the announced, the nation building projects, looking at all of the projects within the transformative strategies, so the ones that may be announced in the near future. And we compared every single project against sustainable finance criteria, and there is a ton of alignment. Obviously the easiest one to think about is Darlington SMR. Nuclear has been included as green for the last few years, so that's an easy one. But we think about the two mining projects that were announced around critical minerals. ICMA published the Green Enabling Principles, which is mainly targeted towards the mining industry and how we can include the mining of critical minerals that are critical for the clean economy or the energy transition, how they can be included in sustainable finance. So there's a good chance that those projects could actually qualify as green projects. Even looking at pathways with CCUS, Scotiabank has CCUS as green in our sustainable finance framework. The Government of Canada has even allocated to carbon capture under their green bond framework. So there's actually, I do see that there's going to be a lot of alignment. I agree with your point that we have yet to see from the government that connection point between the two. There's been a lot of focus on the infrastructure build out, obviously on trade talks. So, that connection to sustainable finance hasn't been top of mind. But we all know Carney has been a big fan of sustainable finance. He's been a big fan of looking at developing a taxonomy, which is something we might potentially see around the budget announcement in early November. That's something that was part of their campaign, of Carney's campaign. So I think having a taxonomy could be a useful tool for the government to be able to connect the infrastructure build out with the climate strategy as well. We just don't have all of the pieces of the puzzle, but I'm hoping that they do come out.
Interesting. I'm curious on both of your perspectives on this, but Yrjo, I'll start with you. Is net zero still on the table? And if so, where, specific countries, specific sectors? We were initially thinking about 2035, but that's literally around the corner. Based on the infrastructure we'd need to get there if we're thinking Canada-wide. But thoughts on 2035? Is 2050 still part of the plans, or is net zero dead altogether?
That's a tough question. I'm happy you're taking it.
Want to take a lead? No. So net zero 2050 won't happen. But it's not that, but it's going to be happening maybe, I don't know when, maybe 2070. China is shooting for 2070. Maybe that's more realistic. So, 2050, it's 25 years from now. Building new infrastructure, having new innovations takes time. So, but there is no reason for despair, because you can't give up. If you think about climate change and the greenhouse gas emissions, every, whether it's 2.0 degrees increase in temperature, 2.1, 2.2, every little increment matters. So if we are not getting to net zero 2050, we should at least make huge progress towards the net zero 2050. I was waking up this morning and I said, I wish I'm going to be still alive in 2050 because I want to see how far we have managed to go. But I'm afraid that there is, I don't think, unless there's a huge breakthrough in technology, fusion energy, for example, or something like that, we're not going to see 2050 net zero in 2050. But that's not the reason to just give up and say, okay, anything goes, because the climate change is real. It's going to come back. It hasn't gone anywhere. It's getting worse. We don't know how bad it is because there's huge uncertainty about the economic effects of climate change. There's a huge band of different estimates. It might not be completely serious, it can't be catastrophic. Anything is possible. So we have to, as a prudent managers, we have to think about what's going to happen in 2050, 2070, and prepare for that. and reduce emissions as much as they're economically feasible.
So don't let perfect be the enemy of good.
Yes.
Exactly.
Fanny, what do you think? If you had a crystal ball on this one, what would you think?
I mean, it is looking challenging for sure. As I said earlier, the Paris Agreement, very aspirational, 2050, net zero 2050. It's aspirational, and it's looking like it will be challenging to achieve it. I think 1.5 degrees was always challenging to achieve, very challenging. It's always been. I've always seen it as this is really a true hard target to shoot for. So I do think there's going to be a lot of challenges, and what that means, we have to think about. Okay, well, so we don't get to net zero by 2050. We don't align with 1.5 degrees. What does that mean? So we do have to think about those risks because we're going to be seeing a lot of impacts from that. And so especially as we're really focused on building out our infrastructure, we have to think about climate adaptation because the mitigation hasn't been working or it hasn't been advancing to the degree we had hoped or aspired for. And climate adaptation was this year at Climate Week in New York a big topic because there is that kind of, we're turning to, okay, we might not be able to do this as quickly as we thought. So what does that mean and how do we prepare ourselves for that? So a huge focus on climate adaptation, building resilient infrastructure, because we are going to continue to have pretty severe weather events. And so it's interesting because we've been seeing this as a trend. Investors are wanting to see more focus on climate adaptation in sustainable finance, in green financing. Our last investor survey that we did back in the spring, I believe that was the top green category was climate adaptation that they want to see allocation to. So a lot of focus on that, given mitigation isn't going as had been hoped.
We've got a couple of questions on startups and sort of the key opportunities, and maybe one of them is around climate adaptation. But what are the key sort of opportunities when it comes to early stage startups, particularly in the ESG space, both from a funder and a fundee perspective? Fanny, I'll start with. Okay.
I'll start with
Yrjo,
you.
I'll start with you then.
The startup world is not my world.
So what we see, especially here in Calgary, is thinking about the oil and gas is not going anywhere. But there are amazing startups here that are reducing the carbon intensity of existing oil and gas assets, using AI technology or capturing some of the heat energy that is now released in the atmosphere and recirculating that back to electricity. So there's amazing kind of pragmatic solutions coming up. The question is how fast we can scale them up, because the problem is enormous. We can't have just small startups doing little projects. We have to be able to scale them up really fast. And then there might be some breakthroughs coming through the direct air capture. So if we are overshooting all our targets, what's next? Direct air capture, so sucking CO2 out of the air, would be one of the options. We have technologies already, but they are so expensive that nobody can afford. They would take trillions of dollars in order to have a meaningful impact. But if we can drive down the cost curve for these technologies, that could be one solution. So there are exciting things happening, but time is running short, so we have to learn how to scale them up really fast.
Do you want to add to that? What are you seeing in the startup space?
So it's less of a space that I put focus on, but I think with what we're talking about, these are at the end of the day it's technology. So you're taking a huge amount of technology risk because we have to see if these things work. So I think that's been that's something you have to have appetite for. You have to find investors that have appetite for. And I totally agree in terms of the scaling. That is critical because there's a lot. I've seen and I've heard lots of presentations from companies that have really cool new ways of doing things, new technologies. But if it's not easy to scale, if it's not economic to scale, that's going to be where the challenge lies for sure.
Awesome. We're getting close to time, and I've got a question for students in the room, especially in business programs. What can we do, and what careers could we look to make an impact in sustainability?
They can take my sustainable finance and climate finance courses. So I think what students should do, I would love to see, let's say, engineering students taking an MBA and getting the business perspective. Because a lot of engineers and scientists is that we come up with a solution in the lab and the problem is solved. No, business is not trivial. In order to have impact, you have to build a business or sell your technology to existing business and scale it up. If you stay at the lab, you haven't solved the problem. So all the engineers and scientists here think about business, and all the business people here think about technology. Technology and science and business need to work together. And of course, we also have to have a deep understanding of culture, geopolitics. So we need kind of a holistic approach in order to solve these issues. So all the students here study all kinds of different things. Don't worry about if I'm taking a course in climate history, does it fit to my finance major? In the end, who cares? Think about issues very holistically. And then once you thought about holistically, then you have to have also deep knowledge in somewhere. If you're just a generalist, you're going to be useless. But you have to have deep knowledge somewhere and also some understanding of other fields.
Yeah. I mean, I think there's so many different aspects of sustainability that has opportunities for position. So whenever I talk to students, I think it's really important to think about what area do you want to go into? Are you interested in sustainable finance, which is, it is sustainable, but it is finance as well. So you do have to, learn the markets and learn products. Do you want to do more sustainability work at a company and focus on how they can move forward with respect to their strategy? Do you want to work on the investment side so that you're seeing and assessing these newer technologies for investments? Like, there's so many different areas within sustainability that you can work in. So trying to see exactly what interests you, I think is really important. And I certainly echo your point about diversification. Like, on my team, we have Holly here. She did biology. We have Pat. He did poli-sci. We won't hold it against him. Zishan did engineering, and I did economics. We have so many different backgrounds. And for us, because sustainability is so complex and it involves so much across our economy, everyone has their expertise and their specialty, and that's what makes us a really strong team together. So, there's no one right background for sustainability or for sustainable finance.
Awesome. Okay, well, we're officially at time, so thank you both so much. Please join me in thanking our panelists for all their insights.
Thank you.
That was wonderful. Thank you to Fanny, Yrjo, and Rui for moderating. Thank you to Enbridge for sponsoring this series. Thank you to our Haskayne team, who I know who have been working hard organizing this event, and thank you to the catering and AV staff here at the University of Calgary campus. If you did enjoy this event, you can go to our Haskayne website, scroll to the bottom, and you can look at other future events that we might have. And there are several of our students here, particularly I think from the MBA and Executive MBA program, so I'd be remiss not to give a plug for our graduate programs here. We've got Kofi Manu outside, who is one of our recruiters, and he's got brochures and pamphlets for our MBA program, Executive MBA program, Master of Management, and we are launching a Master of Finance program that is set to begin in the fall of 2026. So if you've got friends, family, colleagues interested, please spread the word. Thank you to all of you, our guests, for coming out on a Thursday morning. It was a wonderful event, and maybe one last final round of applause for everyone. Have a wonderful day. Thanks.